Well, Treasurer, welcome to the CIS.
Thanks,
At
Robert.
this time of year, you are busy framing the budget for New South Wales, in this case for 2014-15. What do you see as the main challenges in that task this year?
Well, the challenges haven't changed. I mean, we have a revenue base that's sort of growing well below historical averages. We have pressures on our expense base, and we've got a huge infrastructure backlog. I mean, obviously, put that package together, we're right against our AAA metrics. So trying to manage that and keep our AAA has been a consistent theme of government. So having said that, I think that we're in a better position than we were, much better position than we were. The underlying budget balance is close to $4 billion a year better off than it would have been if we hadn't taken a number of measures. So we need to keep the trajectory, keep the faith, but at the same time, investing in the drivers of the economy remains key. We're seeing some results come through in economic performance, and I think a number of the measures we've taken have helped to drive that. So it's really about continuing on the path that we created 3 years ago.
Well, you set yourself the task of exercising better control over expenses growth and to bring it down to or below the underlying growth of revenue, yet you still have a big deficit to a big operating deficit to deal with. So does this mean that there's a lot more that has to be done to control the growth of expenses?
Well, I mean, I'd say it depends how you're defining operating deficit. If you're including the capital expenditure spend on top of it, I'd agree with you. Underlying the last 2 years, we've actually gone into an operating balance surplus. And indeed, the underlying deficit at the moment is really being impacted by the change in accounting standards, the AASB 119, which is the investment rate you're allowed to apply on your superannuation funds, which is a very conservative government bond rate. So when you take that out, the underlying position is actually, I mean, I'd call it break even rather than a big deficit position, and that's a significant step forward. So the measures we've put in have brought much greater control of expenses. I mean, it was running at over 7%. When we came in last year, we got down to 2.7. And if you look at the 10-year average on revenue, which has been 5.6%, we're in a good position. Revenues are down as well. I mean, they're sort of circa 4%, around 4%. So if the economy turns around, we're obviously in a good position in terms of an operating balance point of view to start to generate the sort of surpluses that we want to see. So there's lots of colour and movement, but underlying, I'd say that we're pretty much in a break-even position.
So a state government should really, in normal times, have a sizable operating surplus, shouldn't it? And that's what you are aiming to achieve eventually.
Absolutely.
Yes. So infrastructure is the word on everyone's lips, and it was discussed at the recent Treasurers Conference, and it's certainly a big financial challenge for the New South Wales government. But there are people who say you should forget about the AAA credit rating and just borrow a lot more to fund infrastructure spending. How do you respond to that?
Well, I respond and say it's a very different world post the global financial crisis than it was beforehand. I think you could have had a very robust discussion around it before the global financial crisis, but post it, I mean, we saw spread differentials between AAA and AA plus credits blow out at one point to about 60 basis points. Now, that is a huge impost in terms of opportunity cost of the size of debt that all states are carrying, ours included, which is getting up to sort of a $60 billion number. It really is in a position that would take away a significant amount of money from day-to-day services. And at the same time, in a world when markets start to dislocate, those that have the highest credit rating remain the most access to the most credit markets, and it becomes quite a competitive advantage. It's a competitive advantage that we've kept it, that we've got investors around the world that support it because of the AAA. Yes, there'd still be support below it, but I'm thinking about the dislocation and the long-term costs of it. And at the moment, credit spreads are compressing, but I'm very wary. I mean, I think we should learn from history. That credit blowout means billions of dollars that we wouldn't have on the downgrade. So I think you can still do both. You can still increase your infrastructure spend and maintain the rating, and that's exactly what we're trying to do in New South Wales.
Well, I was going to ask you that, given the fiscal constraints, and are you confident that you will have the resources available to do what you want to do on the infrastructure front, from privatisations and from the initiative that was agreed at the Treasurers' Conference a couple of weeks ago? Are you confident that you will be able to harness the resources to do what you want to do?
Well, I mean, so far we have been able to, and I think that the New South Wales model, which is saying, okay, well, revenue's down, debt's up against the AAA limit, so how do you fund additional infrastructure? Well, if you have balance sheet capital, that's lazy capital, that can be employed into new assets, well, that's what you should be looking at, like any business would. So we have undertaken that. We've to date raised about $7 million worth and applied the net proceeds, and I think it's important you pay back the debt associated with the assets and you apply the net proceeds into new assets. And at the moment, we're making good progress against that significant infrastructure backlog. Obviously, do we decide to do more recycling? Well, that's a question that we'll be looking at leading up to the election. But ultimately, what we've been able to do is to increase infrastructure spend by 40%. Our overall debt is down in terms of forecast levels of about $10 billion, and we bring the budget back towards a surplus position. So I think at the moment the settings are right and they're actually delivering the results.
Well, finally, and on a different subject, the federal government is about to launch a review and white paper on the subject of federalism. What do you hope to see come out of that?
Well, I wish them luck. Sounds a very simple title and a very simple paper. And I spoke personally to Tony Abbott about this, and he feels very passionately, and I'm really encouraged. It seems he wants to leave his mark on federation, and this is not just an academic exercise. This is something I think he strongly believes in. And from a state point of view, I mean, one of the challenges are that our expenditure responsibilities far outstrip our revenue. And that is something in terms of the long-term federation that needs to be fixed. So alignment of revenue into responsibilities, reduction of duplication would be two things that I'd be strongly arguing for in a new federalism that works. Because ultimately where states are currently, the long-term equation just doesn't. You know, you have this massive requirement in terms of services not matched by your revenue base, and a very volatile revenue base and inefficient tax base in many respects. So that needs to change, and certainly I think it's no coincidence that the Federalism report is going next to the white paper on tax reform. Yes. And I think the two are very much linked.
Yes. Well, thanks very much, Mike Baird.
Thanks, Robert.